Good morning, everybody. My name is Paul Hoffland. It is that time of the week again. It's time for the midweek market update video. Got a pretty special video this week. I'm going to have David Mott, who's one of the members of my investment committee, come on and tell us what's going on with the tech sector, jobs, and commercial real estate. Take it away, David.
Appreciate it, Paul. So last week, it was a bit of a rough week. Markets were down about 1% to 2%. When we take a look at some of the big news that went on, it was the jobs report. Jobs came in nearly double what was anticipated, which is a great thing. However, there's some details in there. Nearly all of that was healthcare. When we look at actual corporate jobs, a lot of those white-collar jobs, they were flat. It finds us in an interesting position where jobs are fine for the moment. There's a fun saying I heard, everyone gainfully employed. Right now, everyone is anxiously employed. Will AI take their job? Will AI replace their job? We're not seeing that just yet. Folks are simply being rehired for open positions. Corporations are keeping their headcount somewhat flat. Where this is a weak spot in the economy, though, on that jobs report, is kids coming out of college. We're seeing a slowdown with that demographic. Corporations are slow to hire that wave. They're simply holding what they have as they measure what kind of efficiencies they can find with AI. That was the big news for the week. But in short, markets were down about 1% to 2% last week as it measures its appetite for these AI earnings and crypto and commodity pullback. Months to date, though, largely flat. The number one question I get, where are we going? What's the outlook? Outlook for 2026 remains positive. We're still optimistic, especially investing at a macro level like our firm does. We believe that GDP will continue to march forward at a very respectable tick. Some other high points, AI productivity. It's scaling at a fantastic rate and is justifying a lot of its earnings. So with that increase in AI productivity, it further solidifies the run that the tech sector has had. In addition, to put a bow on things, the markets are very happy with the trade situation. It was the bane in 2025, the uncertainty when it comes to trades and tariffs. It has largely become a tailwind. There's far less uncertainty with trades. We see that in the international markets. When everyone plays nice, there is a lot of room for growth. Right. What are those risks that we're watching? No doubt about it, with the run we've had in tech, concentration risk. Unfortunately, the Magnificent Seven, the top 10 stocks, represent over 35% of the S&P 500. When you have that kind of concentration risk, whether you're looking at something more antiquated like Babson, risk concentration, or something more new age, you have to watch out for a disruptor in that industry. We had a taste of it last year. A lot of folks forget the name DeepSeek. But we are worried about that concentration risk. We're monitoring that very closely. Again, it's a great tailwind that AI has tremendous productivity and is doing fantastic. But with that, it's a double-edged sword. They need to have near perfect results. Now, they've been delivering. Companies like NVIDIA, they have delivered near perfect results. We'll see if that continues. So I guess to put it in a nutshell, we're more sensitive to those tech results. Market reacts a little strongly to it. Another thing that's been lurking that's starting to come to the forefront is commercial real estate. I know we've talked about that a lot over the years. Commercial real estate hit a new high on delinquency, 12%. What that commercial industry market has largely done is what we call extend and pretend, thinking that this is cyclical. As these loan engagements come due, they simply extend them, hoping that this will fix itself. And unfortunately, this is not a cyclical problem. This hybrid, this remote work has really changed the industry. And a lot of these lenders, a lot of these organizations holding commercial real estate are starting to be forced to come toe-to-toe with the devaluation of those properties. Now, some bright sides on that, it's not just limited to commercial real estate. When we look at a lot of industrial real estate, those are actually growing. So there are some bright spots, but commercial real estate continues to be something that we're watching, along with the concentration risk that we have in the tech sector.
Hope you enjoyed that video. Hope you enjoyed the content. If you found it useful, do us a favor and like and subscribe to the channel. Look forward to seeing you next week.